Welcome back to the Crypto and Blockchain Podcast. I'm Jane, and I'm joined by my co-host, MiCA. Today we have some exciting news to share, as according to a recent analysis by Rekt Capital, Bitcoin has just days to go before beginning a new macro uptrend.
Hi, Jane. That's right, despite facing some obstacles such as struggling to flip $28,000 to support, BTC price action is firmly on its way to abandoning its bear market.
Yes, and Rekt Capital presented an optimistic picture of how BTC/USD would likely finish the month, flagging a key monthly close in the making for BTC/USD. In fact, the recent gains have put it above a macro downtrend in place since its 2021 all-time highs.
Exactly, and the March close would be the first potential candle to complete above that trend line on monthly timeframes. Rekt Capital commented, next Saturday, the BTC monthly candle will have closed above the macro downtrend to confirm a new bull market.
It's fascinating to see how BTC price action is closely mimicking past cycles, and if that is the case, the cycle low would have occurred in November 2022, just after the FTX debacle, when BTC/USD hit $15,600.
Absolutely, and this is good news for Bitcoin enthusiasts as it implies that Bitcoin is now breaking out toward new all-time highs after setting a bear market low.
Indeed, it seems like Bitcoin spot price action is keeping market participants guessing as the weekend comes to an end. The mostly flat trading behavior has seen little by way of change, with a push over $28,000 being the first notable event in several days.
And as of now, BTC/USD was back below that level. However, according to popular analytics account Skew, exchange behavior was characteristic of weekends, with overall lower liquidity apt to move spot price more easily.
That's interesting, and trader Crypto Chase highlighted $28,600 as the breaker level, while to the upside, $33,000 was tipped as the point at which a major reversal would take place.
It's exciting to see where this is all heading, and we can't wait to see how things unfold in the coming weeks and months.
And we have another exciting news to share with you. Despite the ongoing market turbulence, venture capital investments in European crypto startups have hit an all-time high of $5.7 billion in 2022. What do you think, MiCA?
That's a remarkable achievement for the European crypto startup ecosystem. 2022 was a tough year for the crypto market, and we saw some high-profile collapses of some of the industry's biggest players, like Terra and FTX. But the fact that VC investors continue to show support for crypto startups is a testament to their belief in the industry's potential.
Absolutely. According to the new study by RockawayX, VC investment in crypto startups based in Europe has reached its all-time high in 2022. It's impressive to see that despite the market conditions, investors still believe in the long-term prospects of the crypto market.
It's also interesting to note that European decentralized finance startups hit $1.2 billion in 2022, which is a 120% increase from the previous year's investments of $534 million. This shows that investors are bullish on DeFi's potential, and it's becoming an increasingly important segment in the European crypto startup ecosystem.
That's a good point, MiCA. Victor Fischer, the CEO of RockawayX, also pointed out that the crypto market is cyclical. During the 2018 winter, the total digital asset market cap fell by 80%, but startup funding activity held steady. It shows that investors believe in the potential of the crypto market in the long run.
Absolutely. Europe is also home to the highest number of crypto startups, according to the headquarters location. However, it falls behind the United States in the number of startups with over $1 million of funding and companies with a value of over $1 billion, known as unicorns.
That's true. But it's still impressive to see that top global investors, such as MiCA Brands, Coinbase, Blockchain Capital, and the Digital Currency Group, are investing in European startups. It shows that the potential of the European crypto market is being recognized globally.
And it's interesting to see that investment in startups that provide financial services made up more than half, 52%, of all investments, with infrastructure and Web3 making up 32% and 16%, respectively. However, compared with 2021, investment in financial service-based startups declined by 19% and infrastructure grew by 24%.
That's a fascinating trend, Nike. And it's interesting to see that Europe's growing prominence as a crypto-friendly region comes as lawmakers in the European Union finalize the highly anticipated markets in crypto assets, MiCA, regulations.
The regulations have been postponed twice by the EU due to translation issues. Laws passed in the EU must be translated into all 24 official languages of the member states. But at the time of writing, a final vote on the MiCA rules is set for April 2023.
It's going to be exciting to see how the MiCA regulations impact the European crypto market. It's clear that the crypto industry is maturing, and with regulations in place, it could attract even more investors.
According to the Federal Deposit and Insurance Corporation, First Citizens Bank is set to acquire all deposits and loans of Silicon Valley Bank.
That's a huge acquisition. So, what's the reason behind it?
Well, Silicon Valley Bank collapsed on March 10 after rumors of a severe liquidity crisis at the bank prompted a bank run. The FDIC was then appointed as the receiver of the failed bank and attempted to auction off the fallen bank.
That's interesting. So, how did the acquisition take place?
The acquisition took place through a purchase and assumption agreement, where 17 former branches of Silicon Valley Bank will open as First Citizens Bank and Trust Company on Monday, March 27, and all Silicon Valley Bank depositors will automatically become depositors of First Citizens Bank.
That's quite a change. What's the value of the deal?
Today's transaction included the purchase of about $72 billion of Silicon Valley Bridge Bank, National Association's assets at a discount of $16.5 billion. The FDIC received equity appreciation rights in First Citizens Bancshares Incorporated common stock with a potential value of up to $500 million.
Wow, that's a huge discount. So, who is First Citizens Bank?
First Citizens Bank is the 30th largest commercial bank in the United States, with $167 billion in total assets and $119 billion in deposits as of March 10. It's a North Carolina-based bank.
What about the remaining securities and other assets?
Approximately $90 billion in securities and other assets will remain in the receivership for disposition by the FDIC.
That's interesting. So, were there any other bidders for Silicon Valley Bank?
Yes, there were several firms that were understood to have either been planning or had submitted bids for the collapsed U.S. bank. First Citizens was reported by Bloomberg to have been planning an SVB bid as early as March 18. Another regional bank, Valley National Bancorp, is also understood to have submitted a bid for the collapsed bank.
Have you heard that Majority Whip Tom Emmer from Minnesota has introduced a new bill in Congress called the Blockchain Regulatory Certainty Act? This bill aims to provide regulatory clarity for blockchain developers and service providers in the United States.
That's right, Jane. The bill affirms that blockchain developers and service providers who don't hold consumer funds are not money transmitters. This means that they will not be subjected to the current overburdensome state-by-state money transmission regulatory process.
Yes, exactly. This bipartisan bill co-led by Representative Darren Soto from Florida is a step in the right direction. It clarifies that non-custodial services, such as mining or providing wallet software, should not be regulated in the same way as running a custodial cryptocurrency exchange.
I think this is a significant move towards regulatory clarity. By establishing a legal framework that differentiates between custodial and non-custodial blockchain entities, this bill can help keep non-custodial blockchain developers or service providers, such as miners, validators, and wallet providers, from seeking regulatory environments overseas.
Absolutely. The lack of regulatory clarity has been a significant issue for blockchain developers and service providers in the U.S. The bill would provide the necessary confidence required to keep them operating in the U.S., ultimately helping America remain a technological leader in the crypto space.
Right, and it's essential that we address this issue now more than ever. The existing lack of clarity is a serious risk to ongoing growth and innovation in the blockchain and digital asset industry.
The bill has received support from a range of industry leaders. The Blockchain Association, the Chamber of Digital Commerce, and the Crypto Council have all come out in support of the bill, highlighting the importance of regulatory clarity for the industry.
I think this bill can have a significant impact on the blockchain industry. It can help establish a regulatory environment that fosters innovation and growth and helps the U.S. maintain its position as a leader in the blockchain space.
Today, we'll be discussing the popular non-custodial protocol, Aave, and its features, advantages, disadvantages, and how it works.
Thanks, Jane. Aave has been making a lot of waves in the crypto space lately, and it's great to be discussing it on our show.
Absolutely. So, to begin with, Aave is a lending and borrowing platform that allows users to borrow and lend digital assets without the need for intermediaries or traditional institutions. What are your thoughts on that, Nike?
I think that's a major advantage of Aave, Jane. It's a decentralized platform, which means that users have complete control over their assets, and they don't have to go through a financial institution to get a loan or lend their assets. Plus, the platform has some of the largest market sizes and lending pools in the blockchain world.
That's right. One of the most significant advantages of Aave is that users don't have to complete any KYC, making it very user-friendly for beginners or relatively new users. They can easily connect their wallet to the platform and start lending or borrowing assets.
I agree, Jane. Aave also supports over 15 crypto assets, including stablecoins such as AUSDT and ADI, and users can earn interest on them.
And let's not forget about Aave's standout feature, flash loans. These loans allow users to borrow funds without collateral, and while subject to fees, the maximum amount of these loans is typically kept low. However, it's worth noting that flash loans have been exploited by hackers in the past.
That's true, Jane. Another disadvantage of Aave is that it lacks high incentives for users to lend or borrow, which may be a deterrent for some users. Additionally, while the interest rates for some assets are stable, this is not the case for all.
That's right, Nike. However, Aave offers Aave tokens, which are interest-bearing tokens that can be minted or digitally mined on the platform. These tokens can then be exchanged or loaned out to borrowers, offering even more opportunities to earn interest.
That's a great point, Jane. And let's not forget about Aave's decentralized nature, which allows for a seamless lending process without the involvement of traditional institutions. Additionally, the platform offers safety measures for lenders, including reserves that act as a cushion against market volatility.
Absolutely. To make money on Aave, users simply need to deposit their crypto assets on the platform and earn interest on them as they are lent out to borrowers. While the variable interest rates for some assets may be subject to market fluctuations, users can switch between stable and variable rates based on the current percentage.
That's a great summary, Jane. Aave is a diverse and impressive platform that has revolutionized the lending and borrowing of digital assets. Its ease of use and support for a variety of crypto assets make it a popular choice for many in the blockchain community.
But users should be aware of the risks associated with flash loans and the lack of high incentives for lending and borrowing. It's important to do your own research and assess the risks before investing in Aave.
That's all the time we have for today. Thanks for tuning in to our discussion on the latest in crypto and blockchain.
As always, it's important to stay informed on the latest developments in this rapidly evolving field. We hope this discussion has been informative and helpful for our listeners. Make sure to tune in next week for another episode of our podcast, where we'll continue to explore the world of crypto and blockchain.